The increased likelihood of a Trump presidency has been putting pressure on green stocks, including AES yesterday, which was down as much as 10%. The stock is rebounding today, but adding Vance to the ticket could pressure it from here. He's a strong supporter of the fossil fuel industry and has publicly criticized the Biden administration's push for renewables. Joining us for more in an exchange exclusive is Andrés Gluski. He's CEO of AES. They sell renewables to big tech companies. And Andrés, it's great to have you back. Welcome.
Thank you for having me.
Do you want to correct any misconceptions, first of all, that might be out there about how your company would be affected by this election?
Yes, well, thank you very much. I think there's a big misconception in the sense that renewables are totally dependent on for example, subsidies. Renewables today are the cheapest source of megawatt hours. So if you're going to power, for example, a data center, you're going to do it with a large part of renewables. So what we're seeing in the States for the first time in many decades is a growth in demand. And a lot of this is coming from data centers. And what they want is time to power. So if you look at the interconnection queue today, most of that is renewables. So renewables are going to continue to grow. And the things that affect renewables really are the investment tax credit and the production tax credit. And those have been around for 30 years. And furthermore, if you look at where the projects are being built, 80% of them are going into red districts. So I think the reality is that regardless of who wins the elections, there's going to be great growth of renewables over the next decade.
Yeah, no, I mean, I think you're right. And obviously it was juiced during with some of the Biden subsidies. You guys operate in Indiana and Ohio, where Vance is from. Is that right?
That's correct. And in fact, we have we serve Dayton, and Dayton is finally growing again after decades of being really a sort of poster child for the Rust Belt. So what we're seeing is a reindustrialization of America. And again, that goes hand in hand with clean energy.
So do you think your company should really be a reindustrialization trade where, how important is the renewables piece of this, in other words?
Well, I think renewables are, the part that's growing. Our renewable business is growing 25% a year. And what's very important is, we have a backlog of signed commitments to deliver clean energy of 12.5 gigawatts. That's really more than 3 years of building. So basically, we have tremendous inertia in the stock. So regardless, let's say, of policies, that's the only way we're going to power the growth of data centers and the reindustrialization of America, to a large extent, will be green power. There will be a need for gas to satisfy the needs when green power is not available, nighttime or et cetera. But basically, I think the whole idea that green energy renewables are totally dependent on the investment and the Inflation Reduction Act is just wrong.
But that said, I think that we can look more critically at renewables and say they have major problems, and we're funding this build out of all of this solar and wind at incredible cost with a lot of subsidies at material that can go out of fashion quite quickly. And yet it creates these massive intermittency issues, which need huge power backups and huge investment to make sure that power can come online quickly when they can't operate. So it's just not clear whether this is really, in the long run, a cost-effective solution contra something like nuclear, albeit that's quite expensive as well.
Well, I'll put it this way. The United States has built one nuclear plant in the last 40 years,
right,
and it was a multiple time over budget. So nuclear is not going to satisfy the energy demands of the next decade. Second, AES invented the use of lithium-ion batteries for grid stability, for energy storage. Now that is a multi-billion-dollar business around the world. So you really can provide around-the-clock renewables, and we do that. Wow. In terms of the subsidies, look, we operate internationally in countries that don't have these subsidies. And quite frankly, we produce clean power cheaper in those countries because something like solar panels cost 3 times as much in the U.S. due to restrictions on imports. So I wouldn't say, again, if you just had a blank slate, took away all, tariffs and took away all subsidies, renewables are still the cheapest source of energy.
They are, but I don't know exactly how you make this comparison, the localized cost of whatever it's called, the LCOE. But the point being, hour to hour, kind of knowing the infrastructure that has to be in place to step up and backstep. That's interesting what you said about lithium-ion. The quick last comment I just wanted to make is you've seen that Vance, for instance, would say, get rid of the $7,500 subsidy for EVs, give it to gasoline-powered cars. Maybe that erodes demand at the margin, but it sounds like for you guys, AI is probably the bigger long-term play in terms of power demand, don't you think?
No, absolutely. AI is the thing that's making the demand for energy in the U.S. grow again. So demand from data centers is growing 15% a year. Total demand from the system is growing at 4%. And for many years, demand for electricity in the States was flat. Yeah. So the only way the United States demand does not grow, quite frankly, if suddenly, the AI revolution stops.
Right, exactly. And I don't think we're going to, even if it doesn't live up to the hype, it's certainly not stopping. Andrés, thanks so much for joining us today. We really appreciate your time.
Thank you.
Andrés Gluski with AES.